Fintech, the tech-savvy disruptor of traditional banking, was hailed as the future. It promised speed, convenience, and inclusivity. However, not all that glitters in fintech is gold. In today's story, we explore the Synapse Yotta scandal, a tale of broken promises, frozen funds, and a profound shakeup in the trust users place in these platforms. This scandal has exposed the cracks in the foundation of fintech and raises the question: is fintech ready to replace traditional banking? Synapse positioned itself as the invisible infrastructure powering fintech innovation. For startups like Yotta, Synapse provided essential services such as payment processing, user verification, and compliance. By 2022, Synapse boasted partnerships with dozens of apps. But cracks began to appear. Customers reported delayed payments and frozen accounts. Regulators later revealed Synapse's back-end was overwhelmed, with chaotic record-keeping and inadequate compliance protocols. Its failure to scale with demand highlighted a systemic flaw in fintech. Rapid growth without robust infrastructure leads to inevitable collapse. Imagine pipes in a growing city that aren't updated to handle increasing demand. Sooner or later, they burst. That's what happened with Synapse's positive experience with signal flow risks, as it picked up the message of our prevailing widespread problems and safety concerns, and produced an opportunity to provide the critical failure in the plumbing of fintech. Yotta was built on a unique premise: save money and you might win big prizes. It was a hit among millennials and Gen Z, who saw it as a fun way to save. But when Synapse's systems failed, Yotta's reliance on this infrastructure left users unable to access their funds. Yotta's marketing promised FDIC-insured savings, but what it didn't make clear was that funds were only insured once they reached partner banks. Money caught in transit through Synapse's systems wasn't covered. This gap left users angry and feeling misled. The fallout was severe. Many blamed Yotta directly, not understanding the role Synapse played. The incident underscores the dangers of fintech companies outsourcing their core operations without sufficient transparency. The Synapse Yotta debacle wasn't just about technical failures. It revealed a regulatory blind spot. Traditional banks face rigorous oversight to protect customer deposits. Fintech companies operating as intermediaries often bypass these rules by partnering with banks. The FDIC insurance controversy became central. Many Yotta users didn't realize their funds were only insured after reaching partner banks. In Synapse's case, delays meant funds were left in limbo outside of FDIC coverage. This incident has ignited debates on fintech regulation. Should fintechs be held to the same standards as traditional banks? Industry experts argue that new frameworks are needed to protect consumers and ensure transparency across the board. Behind the headlines are real stories of loss. A single mother hoping to secure her child's future found her savings frozen with no timeline for resolution. A small business owner relying on Yotta for emergency funds faced closure due to inaccessibility. These stories illustrate the human toll of fintech failures. For users, this wasn't just a technical glitch. It was a breach of trust that disrupted lives and livelihoods. This isn't about losing money, it's about losing faith in systems meant to provide security. The Synapse Yotta scandal offers critical lessons. For fintech companies, transparency must become a priority. Users need clear communication about how their money is handled and what risks they face. Regulators must adapt to the fintech era. Traditional rules aren't enough to govern platforms operating in this complex ecosystem. Oversight must extend to intermediaries like Synapse to protect consumers at every stage. For consumers, the message is clear: dig deeper, ask questions, understand the systems you trust with your money. The convenience fintech offers should never come at the cost of accountability. While the road to restoring trust is long, this scandal could be a turning point. Fintech companies now have an opportunity to rebuild with stronger infrastructure and clearer accountability, paving the way for a more resilient financial future. The Synapse and Yotta scandal is a stark reminder that fintech's promises are only as strong as the systems behind them. By prioritizing trust, transparency, and robust infrastructure, the industry can fulfill its potential to revolutionize finance without repeating past mistakes.